Hello trader, welcome to Mental Minds FX channel. This is part 2 of our trading psychology series, Why You Keep Blowing Accounts. Take a deep breath. Calm your mind and listen carefully. I think by now you understand something important. Your account didn't disappear because of bad luck. It disappeared because of patterns. Patterns in your thinking. Patterns in your reactions. Patterns you repeat, even when you swear you won't. These patterns are invisible when you're inside them, but once you see them clearly, they lose power. The overtrading loop. Overtrading doesn't start with greed. It starts with discomfort, silence, waiting, no setups. Your mind hates stillness, so you scan, you zoom in, you lower time frames. You convince yourself there's always an opportunity, but that's not discipline. That's impatience disguised as productivity. Every unnecessary trade increases emotional exposure. More exposure means more mistakes. More mistakes mean faster destruction. Professional traders wait. Amateurs need action. Every trader lives inside a loop. First hope, then confidence, then greed, then fear, then panic, then revenge, and the cycle repeats. After a win, you feel invincible. You increase risk. You loosen rules. After a loss, you feel threatened. You hesitate. You exit early, or you double down. Your risk is never stable, and unstable risk guarantees unstable results. Consistency is impossible without emotional control. Hope trading. Hope trading is silent. It doesn't announce itself. It whispers. Just give it more time. It will come back. The market always retraces. Hope is not optimism. Hope is refusal to accept reality, and reality does not care about your beliefs. When traders say, "I'll just hold," what they mean is, "I'm afraid to accept this loss." Fear delays exits. Delayed exits destroy accounts. Most traders hate stop losses, not because they lose money, but because stop losses force acceptance. Acceptance that you were wrong. The market didn't agree. Your analysis failed, so you move the stop. Or remove it. You tell yourself you're giving the trade room. But in truth, you're avoiding emotional pain, and the market punishes emotional avoidance brutally. Let us also talk about revenge trading. Revenge trading feels justified. The loss feels unfair. You feel robbed, so you trade again immediately. Not because there's a setup, but because you want balance restored. You want justice. But the market is not a person. It does not owe you. Revenge trading is trading from injury, and injured traders make reckless decisions. Why small losses feel unacceptable. A small loss shouldn't hurt, but it does, because you attach meaning to it. I shouldn't be losing. I'm better than this. I know this market. Loss becomes personal, and when something becomes personal, objectivity disappears. Professionals expect losses. Amateurs are shocked by them. Once you enter a trade, your brain switches sides. You stop analyzing objectively. You start seeking confirmation. You ignore opposing signals. You dismiss warning signs. You search for opinions that agree with you. This is not analysis. This is self-protection, and it blinds you to reality. Deep inside, many traders believe one good trade will fix everything. One win to recover losses. One win to prove competence. One win to restart confidence. This belief is lethal because it leads to oversized positions. Oversized positions destroy accounts faster than bad strategies ever could. There is no single trade that saves a trader. Only consistent behavior does. Why you break rules when it matters most. You don't break rules when calm. You break rules under pressure. Pressure reveals identity. When stress appears, your true habits surface. If discipline isn't automatic, emotion takes control. That's why rules written on paper mean nothing. Rules must be internalized. The addiction to recovery. After drawdown, you don't want profit. You want recovery. Recovery trading is emotional. You're not trading opportunity. You're trading pain. And pain-driven decisions always end badly. The market is a mirror. The market reflects you, your patience, your fear, your discipline, your ego. It amplifies weaknesses. That's why trading feels personal, because it exposes what you haven't mastered. There is a moment every trader reaches, a moment where logic disappears, not suddenly, gradually. It fades under pressure, and pressure reveals what discipline never truly existed. Every trader has a breaking point, a level of loss where rational thinking shuts down. Below that level, you feel fine. Above it, your behavior changes. You rush, you hesitate, you overreact. This is why traders say, "I don't know what happened. I just lost control." Nothing happened. You crossed your emotional threshold. This is why stress makes you dumb. Stress doesn't just affect emotions, it physically limits thinking. Under stress, the brain narrows focus. Long-term thinking disappears. Probability disappears. Risk awareness disappears. You only see the next candle. This is why stress traders enter late, exit early, increase size, ignore stops. It's not lack of knowledge, it's biology. Under pressure, you try to regain control. You add indicators. You change time frames. You micromanage trades. More information does not create control. It creates noise. Noise increases anxiety. Anxiety increases mistakes. Watching price tick by tick feels responsible. It's not. It's emotional surveillance. You're feeding anxiety. The more you watch, the more you interfere. Professionals place trades and walk away. Amateurs babysit them to death. Few things hurt more than being almost right. Price moves close to target, then reverses. This creates obsession. You replay the trade. You imagine alternate exits. You convince yourself you were robbed. But trading is not about fairness. It's about execution. Let us also talk about the drawn-down identity. Crisis during drawdowns. Traders question everything. Their strategy, their ability, their future. This is dangerous because doubt invites impulsive changes. You don't need a new strategy during drawdown. You need stability. Why you can't stop after losing? Okay, now listen, loss creates urgency. Urgency feels like action is required, but action is not always the solution. Sometimes the correct action is stopping, but stopping feels like surrender, so you continue and dig deeper. The just one more trade lie. This lie destroys accounts faster than anything. One more trade to fix it, one more trade to recover, one more trade to feel okay. There is always one more trade until there's no account left. After mistakes, shame appears. Shame creates secrecy. You stop journaling, you stop reviewing, you stop being honest. Shame thrives in silence, and silence prevents growth. Do you know why breaks feel impossible? Walking away feels weak, but it's not. It's professional. The inability to stop is not commitment, it's compulsion, and compulsion never produces consistency. The market does not care, this must be said clearly. The market does not know you exist. It does not see your effort. It does not reward patience. It does not punish unfairly. It simply moves. Your meaning comes from your interpretation, and your interpretation determines your behavior. Now, ask yourself, when I trade badly, am I responding to the market or to how I feel? Most traders never answer this honestly, and that's why they stay trapped. If you recognize yourself here, that's not failure, that's awareness. And awareness is where control begins. In the next part, we strip emotion out completely. We talk about risk, structure, and survival. Not motivation, not hope, but rules that work even when you don't. I appreciate if you press that subscribe button so you don't miss out on the next part. Thanks for watching.